Welcome to How Do They Afford That, the podcast that peeks into the financial lives of everyday Australians. I'm Michael Thompson. I'm a writer and the co-host of the podcast Fear and Greed Business News. As always, I'm joined by Canna Campbell, financial planner and founder of Sugar Mama TV, the financial literacy platform that you will find just about everywhere: YouTube, podcast, books, Instagram, Threads, TikTok, keynote speeches, everywhere. Hello, Canna.
Good morning, how are you?
I'm going well, and I'm looking forward to today's episode because we are tackling a topic that has the potential to save you a lot of money, but it's also one that I will freely admit I find to be a real block. And we talk about kind of money blocks and things like where you just don't know where to start in terms of tackling this.
I'm going to surprise you. I'm in exactly the same place.
Really?
This particular topic, I just feel like I'm left in the dark. I don't know what to do, and I have that, that fight, flight, or freeze mode. I freeze. And I feel overwhelmed. I don't know what to do, and I can't figure out how to peel back the layers and see what the practical solution is. So I think I'm going to get the most amount of value out of this today.
Well, it is very fortunate then that we are not relying on you or me for this, and that we are in fact getting some help with this, because we are talking about making health insurance simple. What to look for, what all the jargon means, and kind of how to find the best deal, isn't it? And the right deal.
And not to overpay for something you don't necessarily need.
Yeah, exactly. There is a lot in this, and as we mentioned, we are underqualified.
Completely. We're handing over the reins to the expert here.
Yeah, underqualified is a complete misnomer. We are completely unqualified to do it ourselves. We are getting some help, and this episode is, of course, supported by AHM Health Insurance, but our guest today is an independent expert, an insurance expert, Tim Bennett from Finder, the comparison website that compares everything from credit cards to utilities, and most importantly for us, health insurance, providers and policies, everything. It is very, very exciting to have an actual expert in this. And I say this kind of looking at you.
Huge sense of relief. I'm so glad we're recording this. So.
Tim, welcome to How Do They Afford That?
G'day. Look, I believe in you folks. I think together we can all upskill and maybe we can all be experts out at the end of this,
I love your optimism.
Yeah, maybe it's unfounded. I don't know.
No. Look, you know what? I have faith. I've got my pen ready. I'm just going to be taking notes the whole time.
Well, I'm not going to let you go until you've answered every single question of mine. So,
it's one of those strange things. Insurance, I know, is not a fundamentally interesting topic, but I get a little obsessive sometimes about things. It's interesting. You get it too, I'm sure.
It's interesting, but it's very overwhelming because you don't want to stuff it up.
Yeah,
because that can come with huge regret and huge financial expense.
Absolutely.
As well.
Yeah.
Let's jump straight into it in that case, because it is big. It is big and it's important, isn't it? Because we need, I shouldn't actually make these general statements that we need it, because maybe not everybody does need it, but just maybe paint the picture for us. How many people actually do have health insurance?
So in Australia, it's about 55% of people that have some sort of hospital or extras cover, and they're different products, and we'll get into that. Mm-hmm. To get on something that you mentioned, Michael, though, is do we need it? Well, in a way, Australians don't need health insurance because Medicare exists. If you're a citizen or a permanent resident, you've got access to a public healthcare system that is pretty robust. There's a larger discussion we can have about that, but it will keep you alive if things go really south.
Yeah, we are lucky in that regard.
So then why should we have private health insurance
Excellent
if that's
question.
the case?
Yeah, so if someone was to ask me that question in a vacuum, I would say I can't answer that in less than half an hour. Luckily, we have half an hour. So that's not a problem today. There are two reasons that you would get private health insurance in Australia and why 55% of Australians have decided that, it is worth it to them. One of them is that the private healthcare system, especially the private hospital system, does offer some genuine advantages over the public system in its current state. That's the first piece. And then the second piece is that the government has a series of incentives and disincentives, come tax time especially, that make it a financially better decision for individuals to go and get private health insurance, to ostensibly take the weight off public healthcare.
So what is the difference that you're talking about? Well, sorry, not the difference, the advantages of a private versus public then.
Yeah.
That's an important one to understand.
100%. And maybe it's best just to mention, so Medicare, which is the public health system we've had for decades in Australia, is pretty solid. If you go to if you roll up to a public hospital and you're going to, not be in great health in a day, then they'll fix you. Emergency services will be covered for you at no cost. The trouble is when things get to not quite emergency level, or what we might call, say, elective, that's when the public system starts deprioritizing or prioritizing.
What's an example of elective? Because when I think of elective, I'm thinking of cosmetic surgery. That's what comes to mind.
Yeah,
and it might be incredibly naive and stupid thing like that, but that's what the first thing that comes to my mind.
Is it knees? Is it knees? Because whenever I hear elective, I just think of kind of blown out knees or dodgy hips.
That is closer to it. Unfortunately, though, it's not stupid to think, no, well, because I think most people think elective, they think, cosmetic. They think not medically necessary. But if you have a blown out knee, if you've got a torn ACL, you need that fixed. So this kind of definition of elective is really, I don't think actually lines up with what people use in day to day. What it essentially means is it's not going to kill you in the near term. Like, you can wait a bit.
So it's very sort of vague boundaries, because if you had, say, a car accident and bunged up your knee, then that would be covered, that surgery would then be covered as in the public system. Whereas if it was just something you did over time, like just wear and tear, getting old and grumpy, Michael Thompson, that would be then elective. Is that correct?
I like how you called him out. That's great.
I'm neither old nor grumpy.
Well,
cynical.
Wow.
Negative.
God, this
cynical is negative.
didn't realise I was being ganged up on today by the two of you. This is
Ganged up on every episode.
I've got to pick a side, and I think I picked right.
You picked a side very early on, Tim. But the elective then surgery waiting times. This is the problem then, isn't it? That if you were to kind of do your knee or just your joints kind of start to go over a long period of time, and it's not going to kill you, but it is going to make your quality of life really, really bad.
Yeah.
How long could it take if you are waiting on the public system and to be in a publicly funded kind of operation compared to if you had a form of private health insurance?
Yeah. Of course, it does depend on the circumstances, as you say, Canna, depending on how it happened and also the severity of your particular case. What happens, though, is it gets classified based on the type of treatment to a variety of different categories. I won't go into the details, but basically the length of time is anywhere from a couple of months to a couple of years. And,
Gosh, I mean, that could be that could take a huge toll, as you said, on your quality of life and your mental health.
Massive.
If you're sitting in pain, and that light but consistent pain that never
Can I
dies
give
off.
you one more example of where this is really, really serious, which is psychological healthcare. So if you need psychiatric help in the public system, it's actually a really expensive treatment category because of the amount of accommodation, the amount of care. There may not be a surgery involved, but it takes a long time to fix. Now, if you are in the public system, the waiting periods to get into a facility are massive. They're in the years. Now, if anyone who's had any sort of experience with acute mental health will tell you, you don't have that kind of time. It may not be a physical threat to your body, but it is a massive threat to your well-being and life in some circumstances. So I think that's one of the almost moments where it's almost a no-brainer that you really need to at least consider a private healthcare plan.
And so if you have private health, then what's the difference? You are able to access care pretty much straight away.
Yeah, so what happens is there's a couple of sort of steps. You have to be covered for the treatment category. So, for example, your dicky knee, Michael, you'll need to have, knees and joints covered under your plan. So when something does go wrong, when it did, I don't know. But when something does go wrong, what will happen is you will see a surgeon relatively quickly, and you should be able to get surgery relatively quickly. And the reason that is because the private system is a bit more directly funded by premiums, by the actual, the funds themselves. And as a result, it's got the capacity that is a little bit more, it's more available.
Okay.
Well, that then leads me to the next question then. What's the difference between hospital cover and extras cover?
I'm so glad you asked. A lot of people conflate them. And I should say, a lot of people see them as one product because that's how they're sold. When you go to Medibank or AHM's website, you will see them often say, hey, here's a combined coverage plan that covers everything you need. Private hospital, when Michael's knee inevitably goes, and then also, to make sure that you've got your dental care looked after, you've got your, optical, physio, etc. That's all extras. That's really convenient, and I think it makes sense for most Australians. Now, the differences is that private hospital is in a hospital a private hospital specifically, and then extras care is outside of hospital.
Ah, that's a good way of thinking.
Fundamentally, that's the difference, yeah.
Wow. Suddenly, I feel like the clouds have cleared, and I'm stepping to a place where I'm feeling a lot more confident rather than completely terrified and intimidated.
I have that effect on people. It's not the first time I've heard it. Yeah.
Can you work on some other areas in my life, maybe?
Goodness me. In terms then of hospital cover,
Yeah.
you can then be, and I feel like there are so many elements of this that we could just disappear down, and we probably really should do a series on this as opposed to one, but we're going to try and jam as much as we can in. What about being treated as a private patient in the public system?
Yeah. So the other benefit of a private hospital is you get slightly better facilities. You'll get your own room, for example. The rooms tend to be a little bit bigger, a bit nicer. Now, that can sometimes be accommodated for in a public hospital, depending on the hospital, how new it is, what kind of space it's got, and you can be treated as what's called a private patient. What that basically means is that you won't be using the Medicare system, and it means that the hospital doesn't bill directly to the government. Instead, they bill a combination to the government and your insurer. It means you'll potentially get nicer facilities, potentially faster treatment, although typically it's mostly about the accommodation. And what that means, though, is that you could be opened up to out-of-pocket costs. Now, that's a whole other piece about private hospital insurance, is that it won't cover everything, especially when it comes to surgery and anesthetic. Sometimes you'll be paying a bit extra. And even in a public system, if you are admitted as a private patient, that can still apply.
Okay, but the trade-off is that it will happen quickly.
It depends on the treatment. It's hard to, I can't say everything like specifically, but the idea is that you will get access to more services that are sort of comparable to the private system.
Okay, all right. We may need to take a quick step back to a few of the elements that you mentioned early on in terms of the policy kind of side around this, and some of the reasons why people should consider getting it in terms of the financial incentives.
Yep.
So the Medicare levy surcharge.
Yeah.
Let's start there, and along the same lines, the lifetime health cover or LHC loading. See, I just drop these kind of terms to make it sound like I know what I'm talking about. LHC loading. I did get that right, didn't I?
That's correct. Yeah, no, you did really well.
Thank you.
They unfortunately they are just two of several different schemes that are in place. They are the two main ones, though, so they're worth starting on. Okay. The Medicare levy surcharge, as opposed to the Medicare levy, is a tax that high-income earners pay. So the Medicare levy, everyone pays. That's just part of your tax. It's separated out to make it feel like you're paying for something specific. It makes you feel good. And it also means they can advertise a lower income tax rate, but that's a different topic. The Medicare levy surcharge, if you earn over, at the moment it's $97,000 for an individual, and double that for couples, then you will pay an extra 1 to 1.5% income tax at tax time if you don't have hospital cover. So if you don't have hospital cover and you earn a decent amount of money, you'll be taxed more. That's the skinny, really.
All right, so that's the Medicare levy surcharge.
Yes.
You can hear how uncertain I am in saying these
It's
things.
essentially the Medicare levy surcharge. There are some other like ifs and buts, but it gets very, very technical after a minute.
All right, and the other one was the lifetime health cover loading.
Yes, and this is the one that people sometimes get mixed up. So when you turn 30, after you've turned 30, every year that you don't have hospital cover, and I should say this is just hospital cover. This is the main sort of area that the government are focused on. Every year that you don't have hospital cover through your 30s, you will be then paying an extra 2% on your health insurance when you eventually get it.
Is that income tested, though?
No. That's
Whoa.
just age.
Wow. So it's really forcing people age 30 or plus to pull their finger out and take some responsibility.
That's the idea. But I will tell you one little quirk in this. When you eventually take out your private health insurance, say it's an extra 20% because you didn't get it until 40. You'll be paying that 20% loading on your premium, but it will reset after 10 years.
Oh.
So it's not a lifetime tax. Arguably, it's not strong enough because young people have been leaving private health coverage, at least historically, for some time, which makes premiums more expensive for everyone. So there's a policy discussion on that. But the idea is that once you turn 30, you're trying to really push them into private health cover so that the premiums are a bit more manageable across the board.
I want to talk to you, we might do it after the break, about kind of advice for young people, advice for families, advice for people as they kind of move through different life stages, because your requirements do change on that. But let's finish off with the I don't want to call it the admin kind of side, but it
Kind of
really
is, though. It's the financial impacts of not having health insurance.
And it's very important because you may need to factor that into your emergency money. All right, so my question is twofold. So the first question is private health insurance rebates.
Yes.
How does that work? And then can you explain how that safety net works? Because that sort of throws me as to how they calculate and how important it is, especially when it comes to tax time.
Yeah, so the private health insurance rebate is actually probably the simplest of all of them until you look under the hood, in which case it's suddenly not simple again. The simple part is that the government gives most people a discount on their premiums. Say a premium is $100 a month. If you are under 65 years old and you earn less than the threshold, which at the moment is $97,000 per year, you will pay about $75. So it's about a 25% discount, which is not bad.
that's pretty good.
It's not bad. It's pretty good. It certainly makes it a bit more affordable. Now, as you get older and as you earn more, that discount goes down. So if you're earning over, I think it's about $150,000, you basically get no rebate.
And that rebate is built into the premiums that you pay.
Yes. So typically what you'll do is you won't pay that 100, you'll just pay the 75. You can do it the other way, but no one does.
So it really is kind of geared to try and get people in as soon as possible in terms of kind of while you're still in your 20s and also while you are on a lower income. That there are financial incentives to do so.
Yeah, the idea is to make it as easy as possible. And even in your 20s, there's actually also a youth discount, which can add a little extra discount if you get it early enough in your 20s. That eventually rolls out as you get older. But yeah, the more young people that are in, I mean, it's like any insurance fund. The more people who are unlikely to claim that are paying into the insurance fund, the cheaper the insurance fund comes for everyone.
The Medicare safety net. This was the other part that does kind of not confuse you, Canna, but it is more of a... It muddies the waters a little bit, doesn't it?
100%. And the reason why is my accountant often asks me, have I looked into the Medicare safety net when it comes to lodging my taxes? So I sort of wonder, why has he asked me that? And is this going to help me do my taxes?
The Medicare safety net is essentially there to limit the amount of out-of-pocket costs. And it's it's associated with a lot of different health costs. But the idea is that out-of-pocket, if you have a particularly bad year and you need to go and see a lot of medical professionals, there will be some sort of cap. And that cap does change over time. It's typically in the low thousands, but it does depend on whether you have a concession card or not, and depending on what benefits you receive. The details of it are quite individualized, if that makes sense, and so it's something worth looking into.
And talking to your accountant about.
Look, it was inevitable, wasn't it, that you were going to slip in a reference to getting professional advice somewhere
absolutely.
Into this episode. Okay, we've covered a lot already, but we're not there.
Nah.
We are not.
No,
We are going to take a quick break and we are going to come back and kind of look at some of those different age groups that we were talking about, and also really some of the quite specific things that you can do in order to find the right cover for you, because I think that is probably the big question that a lot of people have. Like, okay, they understand some of the principles around private health insurance, but it's just a matter of actually figuring out what do you need, what don't you need, and how do you figure all of that out, and how do you find the right deal for you. We'll do all that in a moment. Canna, today we are joined in the studio by Tim Bennett from Finder. We are getting some advice, some great advice so far. I feel like I've learnt a lot.
Oh, me too.
Already about health insurance, private health insurance. So let's put together a little bit of a list. I love a list. Anytime we can fit a list into a show, we will do it, even if it's an unofficial list. Things to consider when you're looking to get a new policy or to kind of change providers. And we might be jumping way too far ahead here, but I'm just going to do it anyway. Different age groups. Let's start there. What do you say to young people, for instance, say in their 20s and 30s, who say they are fit, they are healthy, they don't need insurance?
You won't be forever.
Without meaning to sound too ominous about it, the evil laugh didn't help.
Well, probably not, no. I will say this,
but it's true.
It is true.
It's so true. This is why I'm so passionate about income protection and life insurance and all those other important ones.
You never think something bad's going to happen to you, and neither did anyone who something bad happened to. I would say, though, health in general is very much geared toward reactive medicine at the moment. And really, the better focus is on preventative. And you should think about it in the same way. You should be trying to think ahead and prevent things from going wrong. And if they do go wrong, you need to be able to get on it quickly.
Yeah.
So that's where insurance can help. So for young people, what I would say is to begin with, understand those tax impacts or those financial impacts more broadly that we talked about. The fact that you can get a slight discount in your 20s, that if you wait until after you're 30, it's going to be more expensive down the line. And if you are, earning a halfway decent amount of money, then you might actually be taxed at tax time more by not having it.
I suppose this is probably a good time to mention the different levels of care within kind of policies, isn't it? Because there's bronze and going out on a limb here and say silver.
Yeah, believe it or not, there's actually gold after that as well. Yeah.
I am shocked.
This is why we did so well at the Olympics.
I am shocked by this. All right, so how do those different levels work? And I'm kind of leading you, I suspect, to different levels, say the lower levels, more suited perhaps to those younger people who say, I don't need it.
Yeah, and I should say, to begin with, general advice only, the tiers are really useful and they're a great way to compare like for like. They are not a perfect analog for at this age, at this stage of life, you'll need this, then this, and this. And as you see, they're going to jump around a bit.
Yeah.
There are 4 tiers, and they're only relatively new, actually. So there's gold at the top, silver, bronze, and basic.
Oh.
Yeah, so there you go. They don't give a medal for that in the Olympics, unfortunately, but those are the 4 tiers.
Can you imagine if they did, and that was the medal that you won? I won the basic medal today. Oh, okay.
Okay.
Well done.
You got a trip overseas, I guess. Yeah. No, why not? Yeah.
Yep.
So the basic level doesn't cover anything, with a few very small asterisks. But the idea of basic coverage is that essentially you're getting it to get your foot in the door and to mitigate, to exclude yourself from those financial impacts. So you only need a basic policy to avoid the extra tax, the Medicare levy surcharge, as well as the lifetime healthcare cover loading. So just a basic policy. And a lot of the time, depending on how much you earn, it might actually be cheaper to get a basic policy than to pay the extra tax. So,
oh, wow.
Yeah.
And typically that does, it's not just a policy in name only. There are benefits to it.
Basic policies are pretty close to a policy in name only.
Okay.
They're not. It's not completely. And there are plus policies that sit somewhere between basic and bronze. Now, bronze, on the other hand, and I would say if you're thinking about a basic policy, at least think about a bronze policy, because bronze actually has pretty decent coverage. It covers, I think it's a dozen and a half, about 18 different treatment categories, and they're treatment categories that are pretty common, especially for young to middle-aged people. Things like joint health and bone health and ENT, adenoids and tonsils and things. So stuff that's actually pretty useful.
That's really something, isn't it? Because I would have thought that those kinds of things would only come in at, say, your silver or your gold, because those things can be expensive. If you do your knee, kind of playing sport on the weekend, if you're playing netball or something and you bust your knee.
Now,
That is an expensive thing.
Well, I should say they're not replacements; they're just reconstructions on bronze. So there are still some tiers to go.
Still, I mean, it's more than I thought.
Yeah, bronze is actually, I think, a really, really good policy tier for people to at least start their comparison on.
It feels like it's the best kept secret
Yeah.
in kind of private health insurance.
A lot of people get private health insurance because they're having a baby. So now that's in a gold tier, which I'll get to in a second. And so that's where they end up starting, and often that's where they stay. But, as you alluded to before, Kanna, you're going to be overpaying for most of your life if you're on a gold policy. Not to say that is going to fit everyone, but there is a risk there.
All right, so that's bronze. And really, this might be too much of a stretch to say that these tiers can actually quite nicely align with stages of life. But so you get your basic, which really is more of a financial incentive perhaps rather than a health incentive. Then bronze, which does appear to be something worth investigating, at least for young people who seem relatively fit and healthy. That is worth checking into that.
Especially if you're doing sports still, because you are going to expose yourself to those situations where things might, break.
Yeah, and it's too late once you're lying on the football field, the netball court or something with clutching your leg in agony to suddenly go, I might just quickly sign up for some some health insurance.
Yeah, that would be too late.
Yeah, so do it while you're still healthy before it happens. Okay, then silver.
Yep.
Are we now kind of perhaps moving into 30s and... So maybe I'm trying to make it too neat.
No. The thing is, there is a correlation, right? Silver and gold both cover, to get into the details, they cover the more complex and expensive surgery categories.
Okay.
So anything from, you're getting into, I don't remember exactly which one is in which tier, but things like cataracts and joint reconstructions, and IVF and childbirth. Those are kind of the more expensive categories. And as a result, that's where they live in silver and gold. There is a correlation. As you get older, you tend to be, you've got more chronic conditions, you've got more complicated surgeries that are required because things start to go wrong in ways that are more expensive to fix. That's why there's the correlation.
Okay.
However, and this is, I think, where you're getting to, I would say if you have a look at silver and bronze and try to figure out whether or not you want that A, peace of mind, and B, if you have something that you kind of vaguely predisposed to, that's where you might start to think that maybe silver and gold might be a good fit.
Okay, so that's really looking at kind of assessing yourself, assessing your family history, and assessing kind of what you might reasonably expect.
Yeah,
hopefully it doesn't happen.
Well, let me give you an example. So my brother recently had a baby, and so for the last couple of years, they've had gold cover, at least for his wife. And because gold cover gives you childbirth and IVF, if they needed it, in the private system. That is something that, I mean, they're 30, so they did not, align with that kind of age-appropriate coverage. But because childbirth is an expensive procedure, because mostly of the accommodation, but also the long lead time, that does only live in that gold category. So that's one example where you might jump up, and you might even jump back once you've had all your kids.
Canna, you have a good story about childbirth. That's a terrible segue.
It is, but you know what? I'm happy. I'm not afraid or not ashamed to share my stuff up. I discovered as I was going into the birth suite in early labour that I was actually not covered under my private health insurance. So that was a bit of a rude shock, and I had to pay a large amount of money, which we discovered literally as I'm in labour.
Yeah, that's not a good time to learn that.
Yes.
Was it, were you not covered because of the tier or because of the waiting periods?
Because of the tier. I was excluded because I previously had my other two in the public system.
Yes.
So, and for the third, I decided to go private because of some risks. And yeah, it was an expensive day that day.
This feels like a good time to talk about waiting periods.
Exactly. Yes, waiting periods. Because I've actually had, on that topic of pregnancy, I've had a few friends who have fallen pregnant earlier than expected and forgotten to update their private health insurance to include pregnancy. And so they've had a similar shock.
Well, the truth is, it probably wouldn't have made a difference because once you've fallen pregnant, it's too late. So, so in hospital, and there's...
You've got to wait a year, don't you?
You've got to wait a year. So there's waiting periods differ slightly between hospital and extras. Extras, they're a little bit more variable, but in hospital, there is a 2-month waiting period for every treatment. Ambulance has a 1-day waiting period, but it's kind of a special category on its own, and everyone should have ambulance cover, which you might get to. But hospital, everything has a 2-month waiting period, with one exception, which is, well, 2 exceptions, pre-existing conditions and pregnancy. Pre-existing conditions, 12 months, and you'll be covered, no matter what it is. And then pregnancy, 12 months, and that is to, well, frankly, to protect health insurers from exactly what you're talking about, someone falling pregnant and then getting cover.
Does that waiting period include illnesses?
Yes. So what will happen is when you take out your cover, anything that is pre-existing, even if it's a chronic illness as well as anything acute, that would count towards a treatment category with a pre-existing condition. So you'll need to wait a 12-month period to get coverage for that particular treatment category.
Again, a reason to take out private health insurance when you're fit and healthy.
The earlier you take it, the better. And that goes as you get older. If you think that, I could potentially either have a child or maybe need some of those more complex treatments, upgrade now. Don't wait.
Oh, I am the biggest supporter of private health insurance because we've had a lot of kind of things that have happened and we've hit kind of the Medicare safety net as you're talking about like a number of times because we've got our son has type 1 diabetes and so it means then that if you need an insulin pump, which he does, he needs that and he has to wear it at all times 24 hours a day and that thing can cost $6,000, $7,000, $8,000 and it is covered under our insurance policy. And we had this kind of gold cover because it was all kind of in the period of having kids and things, and all of a sudden we were just like, if we didn't have this, we would have had to wait so much longer in order to do it. And it's the kind of thing that that I'm really passionate about it, just go and just check it out and just and make the right decision for you, but do it for what might happen in the future, not for how you are right at this very minute.
And actually, another really good example, insulin pumps are something that if you have type 1 diabetes, you're going to know about it when you're young, typically, but they're only covered in a higher tier. Yep. So it kind of defies that logic of, as much as, yes, if you're fit and healthy, start looking at a bronze policy, but it's not a guarantee.
Yeah. It's just one of those things that the more you get into it, suddenly you realize there are a lot of kind of little benefits that you think may never actually apply to you. And then all of a sudden you go and check the fine print, and like, okay, God, thank God we are kind of covered for this. What about then, so we've kind of covered pre-existing conditions, we've covered kind of waiting periods. How flexible are policies in terms of what you can include or exclude? So say you go, all right, I would like kind of a gold tier, but my eyes are good, I don't need kind of cataracts and things. Can you actually kind of carve things out? Carving things out, it's not a good term to use when we're talking about eyes here, but can you exclude things?
Sort of. Hospital policies are quite highly regulated. Extras are a little bit easier to do that for. So companies like AHM, for example, have got flexible policies that allow you to kind of adjust exactly what you want covered outside of hospital. When it comes to inside of hospital, every policy has to be essentially signed off and checked by the government, and it has to go into a very sort of clean system. So it's got to have very kind of technically that it covers this and this and this. So you can't mix and match exactly.
Okay, so the flexibility more comes with the extras in terms of, say, physio and those kinds of things.
That's definitely there. There are, though, what's called a plus policy.
Okay.
So what that is it's a hospital policy that is a bronze plus. And so it'll cover everything that bronze covers, but it may cover 1 to 5 extra treatment areas. Now, you can't personally customize them, but if a fund offers a plus policy that, appropriately covers what you're looking for and not much that you don't, then they're really good value policies. So let me give you an example of a plus policy. There are silver policies that cover pregnancy. And so what that would be is a silver policy plus childbirth. And so that way, there aren't too many of those in particular, but if you were to find one of them, you could get coverage for childbirth in a private hospital without having to pay for all of the other gold policy stuff.
Wow.
Yeah.
Oh, I wish this episode existed before I had my third child. Can we talk about the excess?
Yeah.
So my question is can you alter the excess to help keep the premiums at bay? Because I feel like a lot of people are starting to understand the importance of private health insurance, or they already have it, but they're on a tight budget and they want to find a way to help make sure that it can stay there as a priority.
Yeah.
So can we tweak the excess to help bring the premiums down or to help make it more palatable?
Yes, although not as much as other insurance categories. So the reason that I say that is because the excess for the standard maximum excess that the government sets is $750, and that tends to be a per year. So you pay it, but typically you'll only pay it once per year, and then you can be admitted again. So it's not a small amount of money, but at the end of the day, it's a lot better than what it could be if you didn't have private health insurance and you needed, say, private treatment quickly. What will happen in something like car insurance is there'll often be a much higher excess available. And so that's where you can potentially save money on your premium by really lifting the roof on that. Most people have $750 excesses on health insurance, and that's for a single policy. And that's typically, that's basically as high as they go in order for it to be a policy that does all of the government stuff that you need it to.
Okay. So at the moment, I'm looking at our budgets and obviously looking for ways to save money, as are like every single household in Australia right now. And our private health insurance is expensive. We're a family of 5, and we are, I believe, on the gold level.
Yep.
And I called up my private health insurance provider, as I would recommend that everyone does, and asked them, look, there are ways to reduce this premium. I have to say, I panicked. I freaked out and I felt like it was a foreign language because I couldn't quite understand if it was worth taking these risks in order to save potentially about $230 a month off our private health insurance, which is a huge saving.
For families, gold cover is expensive. Yeah.
Yeah. Like I think we pay around about $600 a month. Yeah. And so hearing that potential premium drop was amazing. And I was so tempted to say yes, but then I didn't understand the risks that we were taking. So how do you navigate this to work out you're not adding to the financial stress and risk and potential expenses if things do turn the other way.
No, for sure. Unfortunately, and this is the case with all insurance, but especially the case with health insurance, if you want to save money, you have to consider downgrading cover. Sometimes that is just an associated trade-off, if that makes sense. For some of the less highly regulated insurance categories like car or home, there's a bit more competition in the market. So there might actually be genuinely the same coverage available somewhere else for less. In which case, not only can you switch, but also your fund may, discount your policy and try to match that. That tends to not happen in health, though. And it's because the prices are really tightly regulated. Every year, the health minister has to sign off on the premium increases, for example. So
our hands are kind of tied.
A little bit. There's almost no easy way other than having to really just take the time and figure out what you're comfortable to not be covered for.
Yeah. This is why I panicked and didn't make any changes. And I'm glad I haven't, because you never want to have any regret.
There is one exception to that, which I will mention. It requires a little bit more admin from your perspective, but it can be very much worth it, especially if you're on top cover for a family, which is to consider comparing and switching on a semi-regular basis. Now, for hospital policies especially, that's a really painless process. You find a policy that's out there, maybe it's cheaper, maybe it's the same price, but it has a sign-up bonus, and you switch to it. All of your waiting periods will transfer across. That's a government standard. Extras can be a little bit more complex because every extras policy is ever so slightly different between providers. But the idea there is that a lot of the time that'll transfer across too. Or you could split your policy and just transfer your hospital. The point is, especially around the end of financial year, but any time throughout the year, providers' health funds often offer 6, 8, sometimes 12 weeks free if you switch to them. And that can be a massive saving, especially if you're on one of those big policies.
I know exactly where I'm going to do my research.
So there's one last thing. You mentioned this in passing before, ambulance cover.
Yes.
And I do just want to cover that off because I hadn't even kind of considered that. Yeah. How does that fit into the whole scheme of it?
So ambulance is kind of its own special area. And the reason that is because it's not covered federally by Medicare at all.
Oh, wow.
Wow.
There are 2 states that will pay some or all ambulance fees for their residents, but otherwise it's all out of pocket. And so the way that works is Tasmania and Queensland will cover residents for some services, and depending on your concession status, some other states may have other schemes in place. But generally speaking, if you call an ambulance, you're going to be paying for it. And those costs can be anywhere from $500 up to, say, $2,000 for a typical road ambulance. If you need air ambulance, you're talking tens of thousands of dollars.
Oh, wow.
And in some cases, you're not going to have a say over whether an ambulance is called.
If you're unconscious, because you've hit the ground or something like that, and someone calls an ambulance for you, you're on the hook for the bill.
And also, isn't it, like, you can see there would be scenarios arising where people would not be they're not calling for an ambulance, or they're not getting the appropriate medical care because they just don't think they're going to be able to afford it. Yeah, and you don't want to be in that position.
100%. And that's the one time in Australia that we almost have this kind of parity with those stories you hear out of the US, where they don't have public health care and people don't, say, call an ambulance because they know it's going to cost them $1,000 and they just don't have that space in the budget. And it's really horrible when that happens, which is why even if you don't get hospital cover, even if you don't get extras cover, take out ambulance cover. It's like $50 a year for standalone ambulance cover, and it could save you tens of thousands of dollars.
That is a great tip.
That is so good to know.
It actually feels like that's a perfect place to finish on, because there is so much more that we could go through here. But it's actually nice to finish on a really kind of tangible tip to take away. We certainly have covered some ground, kind of from the admin side, the policy side, the financial incentives, really, isn't it, to make sure that you are investigating private health insurance, and then those tiers, really, the basic, bronze, silver, and gold, who they are kind of suited to, and the things that you need to consider when you are looking at each of those tiers. We talked about waiting periods and pre-existing conditions and exclusions and inclusions and excesses and all of these things, and finish with ambulance cover. I reckon we have covered more in this episode than on any other episode we have done.
I that this is rare, but I actually really agree with you. And I know this is going to sound really weird and probably even a little bit creepy, but I have goosebumps because I've always respected and appreciated my private health insurance, but I have obviously so much more respect and see that it's actually essential.
Yeah.
It is your responsibility to have, as you said, it is a minimum, something in place.
Even with the public healthcare system, if people were able to afford private healthcare, it's like the insurance, it's almost a no-brainer. If you can afford it, you should have it because the risks are too great.
Tim, thank you for talking to How Do They Afford That?
No worries.
That was Tim Bennett, insurance expert from comparison website Finder, and this episode was, of course, supported by AHM Health Insurance. Canna, you look like you have just kind of a light bulb has appeared above your head.
I need to get a jacket. There's nothing worse than something going wrong, and in the moment you're like, I don't know. And there we have, there is everyone's sign.
Now, if we want to know more from you, where can we find you?
Best place to get in contact me is through Instagram at SugarMamaTV or Canna Campbell Official.
And you can hear me every day with Sean Aylmer on Fear and Greed, Australia's best business podcast. Thank you for listening to How Do They Afford That? Remember to hit follow on the podcast, and the very best thing that you can do is to actually tell somebody else. Or better yet, if you know someone who needs to learn about health insurance, then send this episode to them and tell them to listen to it not once, not twice, maybe 3 times. You probably need 3 or 4 times just to take all of the information out of it. Spread the word about How Do They Afford That? Thank you very much for your company. Join us again next week.